Hello and welcome to HEXATalk Industry Refresher. I'm your host Kritika Jain, and today we are going to have a roundup, or I could say a summary session, in which we will address all the topics that we discussed this month, which are typically centered around the three most frequently spoken about topics, or I could say the hot topics, which are crypto compliance, digital transformation, and of course fair lending. To discuss all these topics and give a brief overview of what we discussed, we have Yogesh Pandit with us, who is the CEO and founder of Exanica. Welcome and thank you, Yogesh, for being here. Well, coming back to our topic, the first topic that we're going to discuss about is crypto compliance. We we're all aware, right, that crypto compliance and blockchain has led to innovation across business, and I believe it will continue to do so. So, well, crypto compliance market is changing rapidly, and there's a lot that's changed since we last discussed about this. Yogesh, can you give some recent updates around crypto compliance, regulation, and blockchain?
So, Kritika, first, thank you for the introduction. And I think it's important to summarize. We are sharing a lot of things with our partners, clients, friends in the industry. And I agree. It's the biggest news on crypto, and you're sharing that is because China literally came up with a very surprising, shocking news regulation that all crypto transactions would be deemed as illegal. And especially in that country, you can't do anything against the government. There is nothing that you're going to, or people in China or even outside China who are dealing with people in China or institutions in China cannot now use crypto to do a transaction. That's a blow to lot of crypto currencies, ecosystems, and I'm not personally surprised. I was expecting this to happen. It was a matter of time. Essentially, the whole vision of crypto was to eliminate the middle parties, essentially that are central banks, and central banks do have a value that they do provide to the market, which is risk management, assurance, and who's going to take that responsibility. And regulators or the central bankers have come to a conclusion based on many recent articles. Essentially, in fact, Ritika, perhaps we should consolidate all that and share it with the audience. The signal is very clear, whether it's China, whether it is the SEC, whether it is the Treasury Department, everybody have been issuing warnings in the recent days. IRS, in fact, I just recently formed a file within the tax submission. IRS is asking nowadays, do you have any crypto transactions or assets? So clearly everybody is looking into it. There will be more compliances coming in. Janet Yellen and Powell both recently openly spoke about stable coins and how they are wary about it. The former director of CFPB has joined a crypto risk monitoring firm, and you will see a lot of compliances being put in place, restrictions being put in place, reporting requirements being put in place for this. And as a result of that, obviously, one of the biggest warning recently I read was around cryptocurrency crime in Hong Kong or other regions hitting high. But that Wild West, as the SEC Chief Deshner mentioned, will come to an end. And perhaps if there are any legitimate use cases outside the countries like China, where now they have blocked, they may survive, but it is going to have impact. So we will continue talking about crypto, risk around crypto, compliance around crypto, but people who are dealing with it, please get ready for stricter regulatory environments in the crypto space. A lot happening, as you said. Not only regulators are coming up, but there are new firms that are actually accepting it as well. So it's going in both directions. The private firms are adopting, accepting. Large banks have said that they will have now crypto as part of their asset class. So market is going in both direction. Let's see where it ends.
Thank you, Yogesh. I'm really looking forward for the crypto compliance session that we're going to have in the next month. Well, coming to our next topic, which is around digital transformation. We recently started a digital transformation series, and we're going to cover a lot of topics, including technology, marketing and communication, operations, and many more. Well, we know that from small medium banks to enterprise, digital transformation is the key driver behind delivering maximum value to customers. With with these rising use of data and its efficient management, digital transformation is playing a key role. What are your thoughts on this, Yogesh?
Digital transformation is a very broad subject, meaning you could have changes in processes, you could have changes actually in people as well. We will focus on the technology piece of it. Within technology also, there are different components. You could perhaps use advanced technologies to make user experience simple. So it could be just look and feel good on the front end. But what Hexanica will focus on is perhaps what we are good at, which is data. How does data play an important role in your digital transformation journey? And today, if you don't think about digital transformation with data transformation or data monetization as a part of digital transformation, most likely you will fail. If you look at the market overall, industry overall, it is a very clear sign that the fintech companies that have transformed the industry and are forefront of digital transformation, but primary it is driven out of the use of data. They are so smart in using data to capture customers, to perhaps have better efficiencies, or use the data in an effective way to do any reporting compliances as well. So there is a lot that the small institutions should learn from these fintech companies. And we are there to help, and we will have sessions around how data could be used for compliances effectively, how data could be used for marketing effectively, how data can be used for sales or customer retention or customer acquisition. And what has happened is that a lot of smaller institutions depend on traditional legacy providers who may not be as equipped, nimble, and fast to provide that transformation at the speed that the smaller institutions want. And that's where I think working with fintech companies is very important. And fintech companies who help the banks than compete with the banks. So I think digital transformation will continue as the speed at which technology gets adopted, invented, also becomes faster. And that is a topic that everybody should look for. That was a great session, Kritika. You did a great job with Nadine. Everybody should watch it.
Thank you, Yogesh. And now jumping to our third topic, which is around fair lending. As is always the case, fair lending is a hot topic right now. Regardless of the changes in the regulatory and the enforcement environment, there are some issues that every lender should be aware of. There are also new perspectives on lending patterns, activities, and risks. And I'm aware that Hexanica had conducted a fair lending webinar series and has covered a lot of these topics. So, would you like to highlight some of the things that you discussed in this webinar?
See, similar to crypto or even digital transformation, there are significant changes that are happening in the fair lending space. And the drivers are the new administration and new people in the regulatory bodies. Their view about this topic is very strong. They want to ensure that the issues that were at the forefront because of some of the events that happened last year in North America, such as Black Lives Matters and others, uh, they want to make sure that this is addressed in an appropriate way. Take an example, obviously CFPB is at the forefront of fair lending compliance, but take a look at FDIC. They have come up with a whole new fund for diverse background people, and they are going to ensure that there are banks focused on diversity banking. So you will see this trend continuing. The second piece beyond the new administration and new people is there have been regulations that were set for almost 10 years ago, not yet implemented, such as 1071. And there will be additional requirements. There will be additional data processes requirements that all the financial have to be ready with. The scope is much more wider in terms of financial products. So this is going to be a major trend that financial institutions will have to cope up with and get ready with. And I don't see that trend changing given some of the examinations that are happening recently, given how the regulators are looking at this particular issue. So significant changes. The last but not the least, as part of 1071, there is a whole PPP loan, which is a new category type of loan that was given in a very, very, very accelerated way. Yes, I mean, banks have made good loans and there have been, good thing for everyone, including the Main Street people who have got the loans. But the time of scrutiny is going to come. These are the PPP loans that were given for small lenders, small business lender are under the purview of 1071. We are very much actively working with lending platforms to make sure that we are ready from compliance standpoint. And I foresee, in fact, as you get into 2022, lot of need of automated solution. And Kritika, we did, if you remember, a few surveys in the last two webinars. And one of the thing was very clear that most of the institutions process is either manual or heavily manual, right? So there is a huge opportunity to automate from the lending data all the way to compliances. There are reporting softwares, but you still have to whatever manipulate, transform, or prepare the data to be fed into these reporting softwares, which is done outside. And there is huge need of automation, especially around the data side. So that's where we are today from fair lending. So all three topics are very much evolving topics, whether it's crypto, digital transformation, or fair lending. And we'll continue with these three topics. In the later part of the year, we'll have some summary sessions. And I think the next one on fair lending is perhaps going to be the most interesting, where we have people like Michael Wallace and others who have actually dealt with some of the recent examinations, and they'll share their experience on how regulators are thinking about it. So hopefully the industry will look forward to it. I've already got fantastic feedback from various bankers that they look forward to hearing back from how to respond to regulators, how to get ready for regulators and supervisions. And that would be a great session.
Well, we are not done here. We also have another topic which we haven't addressed earlier, but we would like to highlight some of the things that are happening around IRS reporting. And we know that policymakers in Washington have proposed requiring banks to report virtually all their customers' bank account information and activity to the IRS, regardless of the customer's consent. And well, ICPA has strongly objected to the proposal. What are the recent updates around this, Yogesh? Or I could rather say that what are the top concerns and the next steps according to you?
Comes to this proposition, I have both the sides of the story, right? There is a reason why the IRS is asking for it, and there are reasons why industry is opposing to it also. IRS is very focused view where they want to find people who are avoiding tax. That is their whole and sole target. This has nothing to do with fraud. That has nothing to do with money laundering or any illegal transaction. That's FinCEN and other regulators' responsibility to do that. So IRS, if I can say, have a very focused goal to do that. So I completely also agree to some extent to the position of the institutions or associations. ICBA, for example, has strongly opposed it, and they have received various feedbacks from the financial institutions and the community. So it's something that we will have to look at. Now, in terms of consent from customers, most of the regulations do not need customer consent anyways. Whether it's FinCEN, anti-money laundering, KYC, you have to do it. If you want to open a bank account, you have to do KYC. You know that, and it's global. It's not just North America. Or in terms of set specific limits, like more than $10,000 of transaction and etc., there is already a need which is called monitoring for transaction. So there are various regulations that require. Now, from $10,000 coming down to $600, and reporting of that, especially even if the financial institution of smaller size have to do that, it is a big ask. Can it be done? I mean, absolutely. You know, it's from data standpoint, it's just a filter. You know, anything above 600, tag it and report. So it can be done if regulators want it, but should it be done? What would be the impact to the industry? Will consumer at the end be comfortable reporting everything to IRS or not? These are all the questions to be asked. And I don't know where this will end. Obviously, it will perhaps go to the courts as well. And we'll see the end result of it. At right now, it's all a question mark whether industry is ready for it, and whether it is something that is required to be done. and we shall see where this goes.
Thank you, Yogesh. This has been a great discussion. And in addition to the white paper and the webinar recordings, I'm also going to attach the recordings to these sessions. Thank you all for joining us today. Please don't forget to like, share, and comment. We would love to hear from you.